Hello and welcome to today's Fintech Finance Virtual Arena. Today we're going to be discussing a brilliant new fintech called Cape and the state of business banking going into the 20s. And who better to join me than Cape's co-founder, Edo Omoniyi. Edo, how are you doing here today?
I'm doing very well. How are you?
Absolutely brilliant, mate. And if we could get a bit of background to Cape and what you aim to solve.
Yeah, so I guess in short, Cape are a corporate credit card. So we're a corporate credit card and cash management solution with built-in buy now, pay later functionality. And I guess really what we're trying to do is we're trying to solve the issue of working capital or access to working capital for SMEs. Yeah. So if you think about it, if you're a business and you've been around for about 1 to 3 years, you typically don't have the track record that a traditional lender will ask for. 5 years trading history, etc. There'll also be a whole bunch of, I want to say, barriers to trying to attain credit. So that's, whether that's asking for a personal guarantor or whether that's having to secure the line of credit against your home. What we're looking to do at Cape is we're just trying to remove all of that unnecessary complexity.
Nice. I mean, it's a really quite important role because, as we've seen with the pandemic, so many businesses and people are really struggling with a lot of those issues. So, I mean, I think really to kind of give a bit of background as well to the industry as a whole, could you give our viewers really pre-pandemic, what were some of the maybe kind of key issues facing small to medium-sized businesses?
Yeah, certainly. So I think that, pre-pandemic, the working capital gap or demand for working capital kind of stood around about sort of $90 billion, and that increased by a further 13 billion. And so, you think about the current credit models that traditional lenders or banks would use to try and assess the picture of an SME or assess risk, it would be pretty inflexible and pretty wooden. And so they wouldn't have an accurate picture of a business up to date in order to understand their current position. And so I think those are some of the key issues that a lot of I'd say SMEs would face, and a lot of banks would ultimately impose on some of these SMEs as well.
Yeah, I mean, it's really kind of changed. Well, if from what you're saying there, that data seems to be really quite at the core of some of the issues facing getting access to this cash. So, I mean, with that in mind, now that banks can get better visibility of how an SME is doing, do you think we're going to see new ways of lending and new ways of businesses really gaining access to this capital?
Oh, no, 100%, 100%. And I think we're starting to see that already. There's been the emergence of lots of different, I'd say, fintechs, lots of useful fintech growth, especially in the Australian market. Yeah. Trying to serve this, specifically around data. We know that, so CDR and open banking went live for consumers earlier on this year in July, and the same should be happening early next year in February for SMEs as well. So I think that shift is starting to happen, which should hopefully allow non-banks and fintechs and other companies to offer products and services to lots of different SMEs as well.
Yeah, I mean, hearing about that kind of the Australian side of things, I've heard that the open banking introduction over there is far more all-encompassing than the European one. Is that true?
Yeah, I think so. I think you have to look at the ACCC, and I think they've done a pretty good job in trying to be more encompassing and slightly more accommodating to the needs. It's still in its early days, and I think they're doing a great job to try and improve that. But it's not about trying to be prohibitive. It's probably more trying to find ways of trying to allow different companies to take advantage of open banking.
Yeah, I mean, well, speaking of that, we've talked about how increased data visibility is helping the banks offer up more to businesses. But speaking of that, how important is having an increased visibility or even control of finances going to be for businesses going forward? I know it sounds almost obvious that having that visibility is incredibly important, but what are we going to start seeing in terms of helping businesses get better visibility of their own finances?
I think what we're going to start seeing is a shift in, and especially what we're doing here at Cape, is a shift in really some of the products available to them, how easy it is to get access to some of those products. So, I think one of the key issues that we find with lots of SMEs are around cash flow and access to capital, and the ability to try and surface some of this through some of our products, especially our cash flow forecasting analytics tools. At the best of times, it can be very, very difficult for a business to understand what their position is, what their forecasted sales might be, especially during a pandemic like now. And so I think that's really where we're trying to take this and trying to kind of enrich the experience for SMEs around not just the line of credit, but the ability to understand what they're spending, how they're spending, and kind of, I guess, improve their confidence around that.
Yeah, I mean, speaking of cash flow, from doing various virtual arenas throughout the year about business banking, it seems very much so that cash flow is the most critical part and critical issue facing SMEs. And one thing I find interesting about Cape is this kind of buy now, pay later ability that you guys have. Can you tell me a bit more about that and what that's going to mean for the industry as a whole?
When I think about it, I think there's been a lot of just focus on buy now, pay later, just generally in fintech, in the finance industry. I mean, I tuned into 11FS's After Dark and listened to that, and it's the debate is great, and I think that will only be a good thing for buy now, pay later overall, because it will improve the product for customers. There hasn't been a massive focus on buy now, pay later for SMEs or businesses as a whole, and I think there's a massive opportunity there. For us, I guess we're big believers in buy now, pay later and giving customers choice. And I think for an SME, it's a brilliant way of just trying to lower borrowing costs. If you think about it, there aren't that many opportunities or that many, I guess, ways that an SME can achieve funding, and offering another way that they can lower borrowing costs, especially in a time like this, is only a good thing, I think, for SMEs.
It's a really interesting point that you bring up there. The conversation is almost completely, because I guess obviously the success of Klarna, completely retail focused, and to hear it kind of merge into the business banking world, it's really quite exciting, because I think one thing that's quite obvious is it's a vertical of finance that is pretty kind of maligned. It's been maybe not so profitable earlier on. So, I mean, with that in mind, what were some of the defining characteristics of business banking before COVID? Why did businesses and banks both just settle for this kind of failed offering, really?
I think it's an interesting question. Sorry, I think there's been this kind of one size fits all approach for business banking. It always seems to be last to have kind of any kind of product extensibility or innovation. And to be completely honest with you, I think that's been one of the key defining characteristics of business banking, and to be quite frankly still is. I mean, even Ryan and myself setting up our business bank account in Australia took months, and it was a long and quite painful process. The back and forth, having to kind of send documents, scanning in different things, the requirement of wet signatures, etc. So I think there is a massive opportunity to make sure that we can improve that entire process. And we know that a one size fits all approach just really doesn't work. Businesses are extremely unique. They have different characteristics depending on the industry, and I think all of these need to be catered for. It means that you can create lots of different interesting propositions to help serve different parts of the market and serve them well, as opposed to trying to kind of have this all-encompassing product that doesn't really work for anybody. It's probably better to have a product that works for a particular segment.
Yeah, I completely agree, and especially one thing I find quite interesting is SME owners are typically incredibly time poor, but obviously sometimes moving large amounts of money. So it's almost incredible that it has taken so long for specialization in this vertical of finance. I know you mentioned your co-founder described it as a kind of, as you said, the kind of poor cousin, I think it was. But why do you think it's taken so long for specialization in this vertical? Was it a tech thing? Was it a cultural thing? What's your opinion?
I think advances in technology and even regulation have something to do with it. I think you have to think about how, SMEs as a whole, they're incredibly unique. They can be incredibly complex, when it comes to lending to those businesses safely. If you think about the data available for SMEs, it's very, very different to a consumer. So, that particular SME's primary financial institution probably holds on to quite a fair bit of that data. It's quite opaque, and there are no real kind of ways in to try and access this. Now we've seen obviously the advances in open banking, which has happened across this year and will continue to happen across next year in the Australian market, and even access to accounting data as well. So the ability to plug into accounting as a service platform, whether that be Xero or another QuickBooks, etc. So that now, whether it's a non-bank or whether it's a fintech or whether it's another company, they can go away and, I guess, ingest this data and begin to try and offer services or products off of the back of that.
Well, with that in mind, could we, I want to turn the questions kind of more towards Cape and what you guys are doing. So you've obviously given our viewers a bit of background to what you do, but how does Cape look at this data and how do you action it differently to maybe some of the more traditional institutions we've seen in business banking before? So
at Cape, what we're doing is that we're looking at alternative data sets, right? So we're looking at the foundational sets as well. So we're putting in all of the data from credit bureaus and putting in all of the data around the business to understand them, but also looking at potentially kind of vertical or industry specific data as well. So specific to them, if they're a SaaS business as an example, we're looking at their invoices to understand their realized revenue or unrealized revenue. So they've sold a contract to another business or some licensing to another business for a year. They're 6 months in, there's 6 months of unrealized revenue, and we're trying to pull that into our credit model to understand and try and underwrite that company. And I think that's where we're trying to really innovate on some of these credit products. And the same goes for, whether it's an e-commerce company and we're trying to have a look at some of their trading data or trading history that comes out of the e-commerce platform. That's where I think it gets really interesting, and we can really set ourselves apart and differentiate from a traditional lender or bank.
I really want to, one thing that's become quite interesting about the fintech industry specifically is the amount of British fintechs that are opening up in Australia. Can you tell me, what's that been like, especially with the pandemic, and really, why has this kind of transition occurred?
That's an interesting question. Why have so many, as an example, like UK fintechs gone over there? Look at ourselves. Myself and Ryan from the UK, and we're looking to set up there. I think there's been a real shift in I guess fintech and the way that's beginning to evolve now in Australia. I think similar to here in the UK, probably around about 2015, and the emergence of lots of different brands, whether that be the popularity of Mondo and Revolut and others, and then of course open banking soon after that, and then having lots of different businesses off the back of that build products. You're starting to see a similar shift happen in Australia as well now. So that's probably where a lot of the attention is coming from, or a lot of fintechs see an opportunity going, actually, we could go over there and probably take some of the learnings from the UK market and apply that to Australia.
Yeah, I'm really excited to see what happens, and I think that as we mentioned earlier, the open banking regulations that are going on over there are really exciting and an example of taking what's been learnt before and applying it in new and better ways. So, speaking of that, I've got to ask, what's next for Cape?
So I think for us, the main thing is, I guess, working towards launching our MVP end of Q1 next year. That's the main thing. We're right now kind of just plugging away, building out, trying to stand up the first version of the product, and hopefully before that, so right at the beginning of Q1, so end of Jan, hopefully we'll do a soft launch of our rewards platform for an early adopter cohort, which will be interesting to try and engage and try and drive up those customer numbers. So it's going to be a busy start to the year. It's busy into the year as it is, but that's what we're working towards at the moment.
Well, Edo, thank you so much for your time. It's been an absolute pleasure. And I wish you the best of luck and a Merry Christmas and a Happy New Year. Guys, thank you very much. And to all our viewers, you can catch the rest of the series and much more over at www.fintechf.com. And of course, you can catch the rest of the series also on YouTube and LinkedIn. So thanks very much, guys, and see you in the new year.